I am King Dubi and I've been trading for 5 years and I've been a coach for 3 years, and this is one of my most successful students. I know what, I'm really shocked he was able to do this really fast. And in this video, I'm going to answer the biggest question in the trading industry. How long does it take to get profitable? You've just seen this guy, he made this amount of money in a short time. He got a car in a short time, because yes, it was really short compared to many of my other students, and that's why I want to answer this question. So in this video, I'm going to describe the ideal cycle every trader goes through, phase by phase. At the end of this video, you're going to know the phase you are, and also the phase this guy met me, because he didn't meet me at the start of his journey. You see the phase he met me and why he was able to just get his breakthrough really fast. But most importantly, you're going to know what phase you are and the next step you should take from where you are to skip to that phase where you're funded and you're making consistent profits from this business. Stay to the end of this video. All right, so these are the 6 stages you're going to go through as a trader, and you can see the beginning is red, the end is blue. Many traders dream of being in this phase. Like many traders, they being profitable, living off trading, making lifetime money from trading, not having to do anything else and just survive off trading. It's a dream for most traders. That's the final phase. But then there are other phases in between that you might be in. Now, one thing I noticed over the years is that if you're not aware about the stage you are and what you should do to get out of that stage, you might stay there for many years. The issue is time doesn't help you. Time is just nothing when it comes to trading. What helps you is self-awareness. So we're going to start with the first one, curiosity stage. Now, as the name implies, curiosity stage, this is that stage where you just found out about trading, when that person is really hyper dedicated, happy, they just want to start trading. Maybe they found it from YouTube like me. I found it on YouTube. I saw really young guys living my dream life, buying that Rolex, buying that car, doing all these things, and I was like, God, I want to be this smart, because seeing them read the charts was really attractive for me. So I really wanted to be like them, and that's how I found myself in trading. So those in the curiosity stage, in case you're watching this video and in this stage, probably you have this mindset: I want to quit my job, I just need something that works. That's what they will always think about. Whatever they are doing suddenly feels like it's so boring and it's so annoying. The job you have been doing for like 5 years, 10 years suddenly becomes so exhausting, because you now think of trading as where you just click buttons and things start to work for you, start to print money. So immediately where you are becomes disgusting and irritating. Then what do most people do? They start watching YouTube videos, getting hyped by success stories, like I told you. And how do they feel in this moment? Very hopeful, optimistic, excited, everything. But they are naive, meaning anybody can tell them anything. Someone can just tell them, I made $10,000 in a second from $5 capital. And guess what? They're going to believe it. They're naive. This is like the big catch for those gurus that are fake. Those fake gurus, these are the people they focus on getting, and the pyramid schemes like IML and the rest. Now, this main part of this phase, the decision you make. Now, it's either you make the bad decision or you make the good decision. If you make the bad decision, which is overconfidence, jumping into live accounts too fast, well, it's going to lead you to what? You're going to quit and fail and call trading a scam. Now, some people have a lot of money saved up in their bank. What happens is they gather all this money and put it into a live account. And you know, when you see all these brokers do advertisements like OctaFX, XNest, Wanda, and it depends on where you're living at. I'm in Africa, so yes, of course, you see adverts like XNest, Hot Forex. They advertise themselves, and many people just register their account, verify the account, and put in money and trade. They're gonna lose a lot of money, and that dream quickly turns into a nightmare, and you're gonna quit. Most times people quit at this level, and where you quit, you've actually failed. Okay, failing is that moment you quit to keep trying, or else if you fail but you still keep trying, you've not actually failed until you quit and you fail. And then you see them going all about social media saying trading is a scam, trading is this, trading that, because it did not fit their expectation they were sold to. The good decision right here is start reading baby pips. Okay, keep your money to yourself, start reading baby pips. If you're in that level right now watching me, love baby pips. You learn the basic things there. Why? Because there's so many channels on YouTube that do not focus on basics. I don't know, but me, I have not seen any beginner level friendly video on YouTube in a very long time, and I feel most creators are focusing on people that are already traders like I do. So the best place to get a very detailed explanation about the basics is Baby Pips. Another way you can learn is look for a beginner friendly mentorship. Why do I say beginner friendly mentorship? There are mentors that do not teach beginners because it's kind of stressful. You're going to meet people that have no experience, and some mentors cannot break down things and do not have the empathy enough to be patient. So you have to find a beginner friendly mentorship. So like my mentorship, beginners are free to join, advanced are free to join, intermediate are free to join, because I already have materials ready, laid down materials that you can watch from scratch. Then I am the one to guide you to understanding them and doing the exercise involved. So you have to look for a mentorship like that, or you send me a message in the description via my Telegram. You're gonna see the link right there. So now, if you follow this route, you have significant progress, meaning you're not going to lose money because you don't have any money right there. You're chasing knowledge first. Now, let's move to the next phase. So, what's the next phase that trader is going to go in? Supposing he took the good decision, and what is the significant progress about? Well, you would move to the next phase called the learning phase. Now, it's tagged the confusion. Why is it the confusion? This is where the trader starts to see too many concepts. Now, it's only going to be confusion for you if you go about trying to learn too much, learn everything. You just, packing all the garbage online on your head. You're on Twitter, you're on Instagram, you're on TikTok, you're on YouTube, you're everywhere learning everything. So, what's their mindset like? Wait, this is harder than I thought. So, this is when they start to learn technical analysis. They've been able to learn the basics and they start learning technical analysis, and they say that, oh, this is even hard, right? And at this level, what most traders are doing, studying random strategies, hopping from one method to another, demo trading. Now, this is when you don't have a mentorship. Like for most of us in this phase, I never had the money to purchase anyone. And if you're watching this video and you're that broke, probably you're in the learning phase. This is where many traders get stuck. See, 80% of traders are here. 80% of traders are here. They are stuck. Maybe less than 80. Why less than 80? Because I think this curiosity stage and the bad decision must have filtered so many traders. But learning phase, most traders are here. When you're jumping from strategy to strategy, you're testing everything. You see them have done SMC, you've done ICT, you've done supply and demand, you've done, maybe I'm mixing these names, right? But they are basically the same. Okay, all of them: supply and demand, support and resistance, Elliott waves, Wyckoff, footprint charts, anything you want to call it, right? They are testing everything, and this is because they think there is something somewhere with 100% win rate. They think there is something somewhere that's going to make them a lot of money. So what happened is that they are really, really curious, and when they try something and they lose, what happened? They want to try something else because they feel this is not working. That's it. Now, this phase lasts for the longest, like I said. What emotions are they experiencing? Frustration and doubt. The doubt always comes when they see a good strategy online. It looks like it's too good to be true. They believe later, they try it, they lose money. Of course, many of them have their accounts funded right now because they are so uninterested in demo. Demo to them is time wasting. Demo to them is like, wow, I'm wasting time. I can't just keep doing this. Demo to them is like, why don't I just trade a live account? And all these strategies I'm testing, if I'm making one or two from it, then I'm making money at least. And some of them, they think they are just risk takers, so they feel like they're doing the right thing. Now already they are already seeing that all these good stories they told their friends and family is a lie. When they first were in the curiosity phase, when they told their family they're gonna get a car before the year end, and now it's looking like all a lie, so they're ashamed too. Bad decision, information overload, and no real direction. Now, the worst they can do in this level is by having so much more information, learning more things. Okay, trading live accounts more. They have no direction, and what does it lead to? They're gonna quit, they're gonna fail, and they're going to brutally call trading a scam. And these are the people you see online arguing with all their hearts because they think the market is going to compensate them for being so hardworking, learning everything, going from strategy to strategy, from course material to course material. And at this stage, many people jump from mentorships to mentorships. Probably you think this mentorship have a very complicated strategy, so I think I need to go somewhere else. This is where they tell themselves all those lies, and they quit at the end of the day. Now, the good decision here is get a mentor that your mind resonates with, and then it's a style of trading. There are many mentors out there, and in case your criteria for choosing a mentor is based on how rich he is, what he shows you, then you're wrong. First of all, people that show you something online have one aim: to get your attention. Now, if I want to go chill in the weekends, I will do it off camera because I want to enjoy myself. One, two, because I'm used to doing that. So it's not fascinating enough for me to shoot a video about it. Maybe I may, if I'm with my friends and don't want to just take a picture. Okay, cool, it's a picture. But intentionally trying to do things that will attract people, I'm seeking attention. And if I am seeking attention, then I want something from the people giving me attention, which is their money. So you have to be smart and understand that what you should find in a mentor that should make you choose him is his educative post. If he's consistently posting educative stuff, trying to help the community, and when you see him talk, what he says and how he puts it resonates with you, then this is the person you can try to learn from. I love business so much, and I would never ever try to learn from somebody that focuses on showing lifestyle. Personally, what I would do is I want to focus on the person that I know is smarter, has more intellect. I trust him more. So you have to be aware about it, because it can be really, really misleading, especially if you're from a country like Nigeria where people worship money. You're just going to be drawn and carried away. You have to know value first. The money will come. Now, you need to learn his style of trading. That's the next thing. Because at the end of the day, you're in the learning phase, and why you are stuck is that you have no direction. If you have had so many students that come and they try to run away from the way I teach, I'm teaching you a topic and you're running away from it. I'm teaching you market structure and you're saying it's hard. You want to do something else. Wow. I'm teaching you what got me profitable, but you're running away from it. This is the problem. So it's very, very crucial you learn his style of trading and try to know everything he knows. Try to learn everything he teaches you and implement them. This is only when your learning phase is going to be smooth and you get out of this phase as fast as possible. Significant progress. When you're able to get out of this phase, you're going to the next phase, and that next phase is the testing phase. Now you know what works. There is something I experienced over time. If I try to build a strategy by myself, more like from random videos, it will be easier for me to leave the strategy. I can remember vividly my learning phase. If I learn a strategy from YouTube or anywhere, I can easily give up on it because I don't even trust myself that much. But the first time I tried to learn from somebody, I never left it. I stuck to it for years. And this is exactly why a mentor is good. Another very good reason. Now, when you're in this testing phase, you're testing yourself and the strategy to see for yourself. Now he has passed something to you, something that he says it works. Now, before you start putting your money to it, you have to test it. Some traders jump from learning phase to try to fund their account and try to buy challenges. You need to test what you have been taught via journaling, via back testing, studying, understanding his risk pattern, understanding how he maintains composure in losing streaks, understanding how he maintains his behavior when things are going south in the face of losses. He learned his discipline, his strategy for being disciplined and all. Now, when you know all these things, you are going to shape yourself into that trader that is profitable. So people in this phase, their mindset is really, I need to find a strategy that works for me. Like I said, the mentor is going to hand something over to you. But that testing phase is when you make it yours. You're personalizing it. Tweaks might come. Some things might be removed. There might be some part of the strategy that does not resonate well with you. What you do is either you try to learn it or you take it out because it's not good with you. I have students that refuse to go above the 4-hour time frame. And I have students that even look at the monthly time frame. But we are trading the same structure on higher time frame, the same style, but some of them have a slight different entry model. Like this guy that I'm talking about in this video, that got his first car, his entry models are not the same as mine. He trades London, I trade New York. This is when you personalize the strategy. Action: backtesting one strategy, journaling progress, testing risks to reward, trying funded challenges. Now, this is when the trader is doing more backtesting, gathering data, knowing himself, understanding a lot about himself. Now, this phase is very crucial, like I said. Now, what is this kind of trader thinking? Heavily optimistic about newly found journaling habits and working strategy. You have been toiling and tormenting yourself in the learning phase. Now you just found out about journaling. Many traders do not know about journaling. When I learned about journaling, a new world was open to me, because journaling will make everything clearer to you. You'll be able to track emotions. You don't know how to use a journal and how to journal professionally on Notion? Watch this video. This video is going to help you. You're going to know how to track your emotions and gather data for your new found working strategy. Now, this is one of the beautiful phases, because yes, you would start seeing lots of progress. Some of you will buy some challenges and will be in profit, profit back and forth. At this level, most traders become break-even traders, because now they are trying to follow one thing. That thing is still very new to them. Okay, you just found journaling, you just found studying, backtesting your emotions. It's really, really satisfying. But then after a while in this stage, you might make a bad decision, which I'm gonna read right now. You start feeling extra confident. You start accepting that a good strategy is all you need. In this phase, you're so focused on strategy. You see this kind of people start bashing other traders that your strategy is trash. If you're not trading ICT, if you're not trading this, they start thinking it's all about strategy. And you won't blame these people, because what starts changing the game for them is joining a mentorship. Remember, they have toiled around YouTube, checking here and there. Now they join the mentorship. Now they have seen one style of trading. They have been able to stick with it for a while, and they're learning journaling, and they are seeing improvements. So they're like, whoa, I'm now profitable. They believe journaling is everything. Okay, because they are journaling now, they also think they have to learn from every single mistake they make. So today, if they lost, they're going to journal, and they're going to back test, and they're going to check, they're going to study why that loss happened. While some losses do not need those things, some losses do not need any lessons. These people are obsessed with gathering data. So they lost today, they look at their charts, they point one reason they think they lost, so they can journal it, and then they want to tweak it. This is obsession with the journaling process. I'm saying this out of experience. And this is where some traders also foolishly spend so much on prop firms. Yes, because what happens is everybody is passing challenges. These guys that have money, they are going to buy lots of them because they think they have arrived. Now, that's a bad decision. Now, what is this decision going to lead you to? You're going to get humbled by losing multiple challenges and experiencing long losing streaks, and may stick with. What does this mean? Immediately you start thinking your strategy is the reason why you're gonna make money in this market. You start heavily relying on strategy. What happens is you cannot accept losses. When you blow a challenge, you feel really bad, and you start to find reasons why in your strategy. And of course, the market does a lot of things, so you're going to always see something, and then you tweak something, and your strategy gets complicated, more complicated. As you keep failing more challenges, it gets more complicated. As you keep losing money, going on losing streaks, it gets even more complicated. And at the end, you might just get so frustrated and tired and quit. The quitting is more like, this is not even worth it. I thought I've known it, and man, let me just go get a regular job. But the good decision you can make in this phase is, if you stay humble, learn more about risk management, stay away from prop firms, understand that technicals play a minor role, and aim for consistency, you're going to what? Get into the consistency phase. Staying humble means, in case you're watching this video, you don't know, and I'm not judging you for all that bad decision, just trying to tell you I've been there. How you should stay humble is to just expect anything. Know that if you buy a challenge, there's a high chance of you losing it. Know that every single day the market does not owe you money because your strategy is very good. Know that at this stage, the market is not going to give you anything, does not owe you anything. You're not yet there. You're still a student of the market. You have to calm down. And more about risk management in this sense is that knowing that regardless of how good your strategy is, regardless of the market condition, regardless of the pair, regardless of if you've seen that setup or that pattern over and over and over again, you can still lose money. Understanding that losing streaks are part of the game, you have to understand it now. You have to accept it now, that you will lose 10 times in a row. It's normal. 15 times is normal. You will lose. You have to understand, despite you following your rules. So this understanding should make you know that every loss should not lead you to tweaking something. This understanding should make you that every losing streak doesn't mean you have to change something. You only start tweaking something in your strategy when the losses streamlined for like 15 in a row have one cause. Is it emotional cost, technical cost, time of the day cost, anything that causes it, that happens 15 consecutive times, this is when you should go and engineer something. Or in your back test, you've back tested a full year data and one particular variable in your strategy brings back losses every time you take a trade with it. Now you can remove. And when you're trying to tweak, you're not adding a complex to substitute for something, you're only removing, because you want every change in your strategy to move it towards simplicity. You don't want every change to complicate it. It's better you leave it that way than complicate or add. Why? Because for everything you're adding, there's a disadvantage attached. For instance, you find out that you're winning, losing, you're like in a break-even phase, whereby at the end of the week, at the end of the month, every money you lost is equal to the money you make. Nothing too significant higher. What many traders do, they want to increase their risk to reward. So when you increase your risk to reward, the disadvantage is that you're going to reduce your win rate. Immediately your RR is more than what it is, your win rate will still drop. So what happens is that you're going to end the next month in a loss because your win rate has dropped. Even if it's not supposed to make you end in a loss, I'm not trying to say a lower win rate will make you lose. I'm only trying to say a lower win rate will stress you mentally, because if your win rate is now 30%, it means if you have a 30% win rate, it means out of 10 trades, you win 3 and lose 7. That's meaning. So it means this 7 might come scattered, it might come together. And what happens is when it comes together, it's going to worry your mental health. More like you lose 1, 2, 3, 4, 5 in a row, you get really frustrated, and you might be scared to take the next trade, which is going to be a win. You might be scared to take the next 2 trades, which is going to be even a win. So that's exactly why you're going to do stupid shit because of your losing streak, and then end the month in the red because you're going to start tweaking and becoming emotional and do stupid shit. So tweaking everything, every variable you want to add or anything you want to touch, there's a disadvantage attached. So there is nothing that is going to completely make your trading 100% advantage to you. It's not going to happen. So instead, remove complications, things that are not good. Remove. You mustn't replace, you mustn't add. Now, for instance, if you notice that you lose every Mondays, well, go and back test or study your journal. Can see those Mondays you're losing. Did you cause the losses, or the market cost it, or your strategy cost it? What is causing that loss? If it happens to be that you're executing perfectly, your strategy is the one causing it, then you can go and back test to still see more data of every Monday in every month, which is like 4 Mondays. You can back test for a year data. If majority are like more than 50% are red, then what should you do? You shouldn't try to change your strategy for Monday or add another confluence or do correlation with DXY. No, you should just remove the Monday. That's what I mean by simplification. Stay away from Prof MC to traumatize you. Why will it traumatize you? Because you will lose a lot of challenges and it's going to make you scared to scale up later. So later when you start seeing the consistency, you'll still be scared to scale up because you have lost a lot of money to Prof MC. It will traumatize you. And also it has a way of amplifying losses because of the challenge passing stuff. We went through school always wanting to pass our exams. Whoever doesn't pass his exam is see himself like a failure. So what this thing does, you failed your challenge, makes you feel like a total failure. So you don't want to feel that way. So once you fail a challenge, you are so mad at yourself. That's why I say multiple blown accounts will traumatize you. It's better you wait to your sales consistency. Understand that technicals play a minor role. Yes, of course, the technicals is just what helps you to manage risk in the market. It helps you know where to keep your stop loss. It helps you know, at least have a little logic as to why one side of the market is higher to play out than the other side. That's all. What helps that strategy is how you use it and how you execute. So your aim shouldn't be getting funded at this point. Your goal should be what? I want to be consistent. I want to get to a point where I'm executing consistently, I'm executing flawlessly. I want to get to a point I'm trading just few pairs over and over again, the same strategy for a long period of time. I want to give yourself that goal. I want to stay with this strategy till December. I want to stay with this strategy till 5 years time. I don't want to change anything. Now this is your goal and this is what you focus on. And in that process of following this plan, you have losing streaks that would shake you, losing streaks that will make you feel like you're the worst person on earth, and it's just a losing streak. You'll be out. You have to still keep trading the same strategy, and the results get into consistency phase. So here we have the next phase, the consistency phase, the breakthrough. Now you see a lot of YouTubers will tell you very soon you're gonna break through and you're gonna make all the money that you have ever lost trading. You're gonna make it back in 1 month. I don't like that statement. I don't like that statement, because what happens is that once traders start seeing a bit of consistency, just a tiny bit, they want to start increasing their risk. You are human, and if you put too much risk attached to certain things, you would mess up. So this is exactly why I don't like that selling of your dream. Yes, you would make all the money back, but you have to earn it by being in this consistency phase as long as possible, and you would scale slowly. Now let's look at what most traders are thinking in this phase. So they're having the mindset of, I finally understand the game. Finally understanding the game is a combination of knowing that, oh yeah, I know that technicals is not everything. I also know that the market will do whatever it wants to do. I also know that losing streaks is normal. I also know that if I lost in a row and I win and a loss, I can probably end the month in profit and I'm fine with that. And if I don't end it, I'm fine with that. They also know there is no need to like brag about their strategy. They just know that everything works, and their strategy is just what works for them because it's what they know. Every other thing works. You see them stop criticizing and stop doubting people's payouts online because they know it's all possible. That's the consistency phase. So they're like, I understand this game. Now action, mastering one pair following a routine. Well, you mustn't master one pair, but I suggest 3 pairs max for maximum focus. Now this is when you're going to master these pairs and stick to it. You're not looking for anything else. If these pairs do not give you setup, you're like doing something else. So this is when most traders just follow a routine, like they're not stressing. Come execute. It's very boring right now. Just come execute, come execute. If it's not clear, they leave it. They come execute. So detached, so unbothered. What emotions do they have? Confidence, self-control, clarity. They know their strategy. They know what works. They know what doesn't work. They are just replicating. There is nothing to figure out. Nothing to. At this point, you see them. They hardly backtest. They just keep their journal up to date, and they just hardly do too much. They just come to their session, they trade, they go. Take note that their time of the day trading is consistent. They are not trading London today, New York tomorrow. They have a steady time they come to the chart. Now, bad decision. Traders in this level can still make stupid decisions, like very stupid decisions that's going to jeopardize their consistency. Yeah, their consistency. So get enticed by what you see on social media and decide to change strategy or try to tweak something where there is nothing to tweak. Getting to panic if you have lost consistency during a losing streak. Now, this is where traders lose this again. So they might be having consistency, but because there's somebody somewhere told them that if you become profitable, you would make everything back you've lost in the market in 1 month. So what happened? They are so hyped up, and because consistency is slow and is gradual, they are not impressed with their results, so they want to make quick money, and they want to do things like increasing their risk to reward, changing pair to something more volatile. If they were trading forex, they want to move to indices. They want to do something that is inconsistent with what they have been doing. That feeling always spikes up from what they see online. The way spikes up from a trader that said he passed the challenge in 1 day. It always spikes up from a trader that said he flipped 10K to 1 million or $100 to 1 million. There is always something that triggers it. And at the end of the day, what happens? They try to tweak something. They try to change pair, change session, and then they'll go into a very, very terrible losing streak. And then oftentimes they start to panic in that losing streak, or even if they don't change something, maybe they are just going through a market condition that is unfavorable for their strategy. And then what happens to them in this market condition? They start losing and they think they have lost their consistency. They think, man, I've lost. Man, I'm not where I used to be. I've lost my consistency. Help. I've had so many students that come to me in this phase and they're like, I don't know what's going on. I used to make money. I don't know what changed. Help me. Now, this is them trying to even, get themselves into more problem. Because if you don't meet a mentor like me, let's say randomly you fall into somebody that wants to just eat your money, he will tell you, wow, learn my strategy. Oh yeah, join my academy. They'll tell you the pricing and they'll join the academy and they're going to teach you from scratch again. Now, this is you going back to the learning phase. But if you meet a mentor like me, I can tell when somebody has been doing fine, but just had some mistakes. And I'll tell you, what strategy do you trade? You tell me the strategy. I'll say, okay, fine. So I'm going to hop on a call with you, although that's when you become a member. But I'll tell you before you become a member. I'm going to hop on a call with you. And then I'll tell you, oh yeah, backtesting in front of me. Let me see how you trade. Let me see how you analyze your charts. And then when you do, I would know because I've done over 100 strategies in the past. I've tried almost everything. So I can tell how most strategies work. And with my experience, I would know. And I'll tell you, well, this can work long term. Go and backtest it and bring 2 months data of this strategy, following your checklist. I can help them create a checklist so they can be more disciplined in the backtest. And if the strategy is working, trust me, I'm not going to tell them to change the strategy. I'm going to help their mindsets, their risk management, their routine. And from this phase, they are moving forward. They are not going back. And that's the problem. Everybody cannot just be as honest as me. Some people do not even understand what these things mean, and they are just going to start teaching you from scratch, and you're going to ruin all your progress for years. So beware. You have to follow routine. And if you go through this bad decision, like I said, results is you're going to lose challenges, you're going to go through deep drawdown, your psychology will be destroyed, loss of self-confidence, anxiety, loss of memory. Loss of memory is more like you forget what you used to do before that gave you the money. Like you could look at your chart because you've strayed so much. You look at your chart, you become confused. Like, what? I can't really understand what I've been doing. You're so stressed. Yes. That's what it leads to, and more frustration. And you can find yourself back in the learning phase, like I said. Now, if you make the good decision of sticking to your routine, taking advice from your journal alone, buying small challenges you can afford to lose, then you can move to the next phase, which is winning more than losing. You can find out that, wow, at the end of the month, you're ending every month, every week with profits. Passing small challenges, ending most months and quarters in profits. That's the truth. Now, when you continue with this pace, what happens is that payouts from these small challenges, you can use it to move to the next phase, which is scaling and a profit phase. The profit phase is green, as you can see, is green. It's like the final destination everybody's chasing. The profit phase, the reward. I call it the reward. This is when the market rewards you for consistency, not for your strategy. Most traders in this phase have the mindset of this is now a skill I can rely on. This is now a skill they can rely on. Yes. Now you can trade full time. You don't have to do anything. You don't have to do anything. Like, you just focus on the markets and probably building businesses that are related to the markets. So the action traders like this take is scaling risk properly, reinvesting profit, potentially passing funded challenges. So this phase is when you start scaling, like I said, and you start reinvesting profits. When you make money, you split it. You have the one that you reinvest back into trading and the one you invest out of trading, and what you keep in your savings. So most of them are proud, focused, but humble. Proud of, yes, I've accomplished something that most people cannot accomplish. I was able to stay to the end. And focused is that they don't stop being consistent. They still journal and they still read their journals. They still read about fundamentals. They still learn. But what are they learning is how to be better traders, not how to have a better strategy. Their strategy does not change. They're going to trade exactly the same way, regardless of whether it's still working or it's not working that much or it's working sometimes. You still have to trade the same thing. They are still focused and patient regardless of how the market changes. But they are humble because they're not going about telling people their strategy sucks. They're not going about causing trouble, causing beefs online, beefing everybody's strategy. They are grown more than that. Now, can these people make bad decisions? Of course, but now it's going to be more financial than trading. Spending prop withdrawals on lifestyle. Now, at this level, some people are very bad with money management because most traders stay through all their time learning everything about trading. They forget how to manage money. They forget it. Living based on hope to feed on next payout. Now, they have no other skills in their life. They have no other sources of income. They ditched everything. They don't even have friends. They don't contribute anything to the world. So what happened is they just live off trading. More like their house rent, their clothes, their food, all is based on next payouts. So the question is, what if the prop firm crashes? What if they deny you your payouts? What if? Like, they're living their life on probability now because the market runs on probability. What this usually leads to is blowing funding due to pressure from needs. Yes, of course, you start trading anyhow sometimes. You start taking some setups anyhow because you are pressured and you might blow your funding. You can. You are human. The market is still brutal, regardless of where you've got into. So, pressure from family and friends. Yes, because at this point, yourself showing lifestyle, you're spending money recklessly. Everybody now thinks you're a billionaire. Everybody's asking you for money. Everybody's depending on you. And what happens when you start facing this pressure? And the next is you may find yourself struggling with anxiety and self-doubt. And at some point, when you start losing it because you're now under pressure, your emotions are all over the place, you can start struggling with anxiety and self-doubt because you're like, I hope I'm not going back to the learning phase. The good decision you can make right here is splitting payouts into 3 for savings, more accounts, and investing in other business. If you're going to get any payout, you're going to split into 3. 1/3 is going for savings. Now, this is where you stack up money for yourself. Yes, you should not think about trading when you want to eat. You shouldn't think about trading when you want to buy clothes, when you want to go on trips, when you want to do anything. It should come from your bank account. So stack up savings a lot. Even for your first 10 payouts, all savings before you can start trying to buy more accounts. Save. When you save, you are calm when trading because you have money in the bank. More accounts. So some part of the money is going to more prop accounts because prop account is just more rewarding than personal account. Yes, of course, prop firms are really crazy with their rules and everything, but if you do the maths, you would need a real $100,000 real capital to trade and get the same amount you get trading a $100,000 account on prop firm. Reason is because if you have a 100k account, I know some of you are thinking if you have a 100k account you risk 5% per trade. See, no matter how big your account is blowable, very very blowable. Don't even go and think anything. You can blow it very very well, no matter how big the account is, because it's all about percentage. If you were risking 5% in a row, you just need 10 trades, and when you lost 10 trades in a row, you've lost half of your capital. It is mentally disturbing. All your decisions after that time is going to be emotional, it's going to be irrational, and what happened is you're going to have a higher chance of blowing the next or losing another 10. Very very high chance, very very high chance. And do you know how many months you're going to stay bringing back an account in a 50% drawdown back to break even? Because you're not going to have the balls to keep risking 5%. You're going to reduce your risk, meaning it's going to take you so long to come out. So most traders that trade high capital like that, they still risk 1 to 2% max, which is still going to be giving you around the same payouts you have from prop firms in a month. So you see why prop firm is now better at this stage of your life. Personal capital is good, but prop firm is still very much needed because you just use the $500 to purchase the account, and if you're funded, sweet. make money. The next is investing in other businesses. The truth is that you shouldn't build your life all around the chart. In your country, a government might come and just ban trading softwares. It's possible. Anything can happen. If you have other businesses, you can have other side incomes, and also you can impact other people. What does your good decision lead to? Stable psychology, good performance on chart, happiness, and financial stability. Now, this is where most traders are aiming for, right? But now there is this stage we call the funded stage. This profit stage is very good, but what about the funded stage? Let's see. So, what are most traders here thinking? I trade prop firms and live on my own terms. Now, this is where that trader is confident. He has been able to carry out these good decisions we talked about here, investing in other businesses and doing what's right. Now he's in the funded stage. Now, this is where you see he's managing multiple funded accounts. He's building a personal brand or mentorship, is diversifying income. Now, you see people here doing mentorships, having personal brand around trading. You start seeing people having prop firms. I know some traders don't get to this funded stage the right way. They jump from learning phase to this because maybe they have money from other businesses and then they want to start selling a dream and doing mentorship. That's why you have very few traders that are doing mentorship the right way, like me. You have very few traders that understand what they are doing, because most of these people, most of these individuals, they don't even know what it takes to get here. They don't know at all. They don't know. So when they are teaching you, or when they are teaching people, they just teach people strategy and they leave you, and you have to find out all these things the hard way. So the emotions, they feel fulfilled, strategic, and free. And what's the bad decision you can do? Make a living only from trading, staying alone and keep a timid life, shy away from learning about business life and growing real wealth from tangible assets. See, there is more to life than trading. From fitness to relationship with other people, relationship with the opposite sex, to investing, there's a lot to learn. People spend years, like 5 years, 10 years, just in trading, chasing this phase, and lose a lot of other things in life. Now, if you just sit on your trading desk every day and live a life of being alone, at some point it's going to be very boring. And what does it lead to? You become a good trader with no knowledge about how life works and zero contribution to the society. And if you make the good decision of investing in businesses, owning real estate and stocks, getting connections with influential people, very important. You want to like be in the spotlight. You want to also have power in your country. And how you have power and make people like you is getting in touch with influential people, people that other people like. Growing a legacy by impacting lives via trading. This is where you take your mentorship serious, not scamming people or lying. You're like actually helping people make money, actually helping people get cars, like me. This is a legacy, and you only achieve this when you are doing it right. Results, fulfillment, leaving your job, freedom. Guys, this is the best you can do for yourself. I know you have been toiling in trading for so long, you've been trying your best, you've been trying so hard, but think about it. You can go through this video over and over again. What phase are you? Where do you think you are? Now you know the good and the bad decision. It's time for you to take the good decision. If you're still learning, learn with direction. You need a mentorship. If you are in the testing phase, stick to what your journal tells you. Tests and find consistency. But anytime you lose that consistency, anytime you lose that phase, you stray, you have to go back to what you have been doing before. That's how you get back on track. You don't go to learn another strategy. You don't go to find mentor. You need mentor, but is it at all stages in your life? No. The stages you need this mentorship, you should be in learning phase or curiosity stage. When you're in testing phase, if you jump from mentor to mentor, you go collect. You will start all over again from learning phase. And you don't want that. You want consistency. When you have something tangible you're already doing, you have a stream of actions, routine you already follow. You now have to test them, gather data, and build consistency. If you're watching me right now and you're in the learning or you're in the curiosity phase, the first link in the description is going to lead you to my Telegram. You know what? When you chat me up, we're going to have a long discussion. And also, those of you here in the consistency phase or testing phase also that lost track, because if you lose track, like I said, you have to go back to what you're learning. But then if you've thought back, you were never journaling, you never had track of what you were doing, and you're like lost, you can still DM me. See those information you lost, we're going to bring it back. We're going to work together. That's what the mentorship is about. It's about finding what stage you are and guiding you from right there to your destination, which is what? The final profits funded stage, profit stage, funded stage. All these two stages are glorious. So hope you learned something from this video. And my student has been able to get to this phase because he has been making consistent profit even before he bought this car. He did not get it by luck. He started seeing the consistency in August 2024. So see how many months from then. So if you want to join the academy, you know where to find the link. First link in the description. Tap me up. I'll see you guys in the next video. And this video coming up right here is very expensive. Make sure you watch it and learn. See you guys. Peace.